Hello. We're going to go over today, we're going to go over how to create a statement of cash flows.
How do you get your kids to use this?
So now we're going to look at how the statements articulate with one another. And so we're going to look at accounts receivable deals with cash collected from customers. So what we're solving for is cash collected from customers. And so we're going to look at this receivables account kind of as our control account. And then what transaction impacts the receivable is when we have a sale. So what I show the students here is they have the, we want to look at the transactions that impact receivables. So when I sell customers my product, I have a debit to receivable and a credit to sales. So how does sales impact the receivable account? With a debit to the receivable or a credit to receivable? Yes, it's a debit to the receivable. And so that's why the sales made on account, whatever our sales figure is, so in this case it's 900,000, we're going to plug in here. Now, do we have our beginning balance of receivables? Yes. Yeah, so our beginning balance is 190. I'm getting it from right here, and our ending balance is 110. So we're going to use the T account approach. So when we do cash collected from customers, we're always going to make a big T account for receivables. We put our beginning balance in, our ending balance in, and then we have to ask ourselves, well, how does cash impact the receivables account? So when do we use cash in receivables? So what does that journal entry look like? Our receivable goes down when we do what? When we get cash from our customers. So we debit cash, we credit the receivable. So how does cash impact the receivable account? With a debit to the receivable or a credit to the receivable? With a credit. So this is our unknown. This is what we're solving for. This is literally our X. This is what we're trying to solve for. So now we have enough information, but we have to set up the T account. So there's the receivable, the beginning balance, and the ending balance. We have to ask what income statement account is articulating, and that is sales. So sales and the receivable, are going together. Okay? So those are the two accounts that basically are articulating with one another. So we'll just highlight those in red. Okay? So now what is our sales figure? What's our sales number? 9. Okay? So now do we have enough information for our operating section? Do we have enough information to solve for cash collected from customers? Okay, so what I do here is I use an algebraic equation. So I just say 190 plus 900 minus x gives me 110. So kids know how to solve that, right? So this plus this minus the credit side gives me that. Now, some people, I've only had one student in 6 years of doing this that preferred the formula approach. They actually memorized all the formulas. Okay, that's fine, but I think this is the best approach to use. Make the T account, put the balance in, and then pick your income statement item that's articulating with it, and then plug it in. Okay? So what does that come out to? Did anyone solve for that? I'm pausing you guys. So there's the 980. So we're going to put the 980 in. So 980,000 was cash collected from customers. So that's going to be on our statement of cash flows. Okay? Allison, we good?
We are, and I was just going to, while you're reading my mind, remember my little shortcut yesterday too, because it was a $80,000 decrease. So you add your decrease to your sales, and you know your number.
Mm-hmm. That's another way of doing it. So what she said was this account changed by 80,000. You had 900 here, so she just took 900 plus 80, and that's how she gets to the 980. I think that's fine too. Like I said, whatever you feel most comfortable and confident teaching them on how to calculate that. Okay. All right, so now we're going to go on to the next one. So the next one is, we're skipping the one. So we'll go to cash payments for insurance and rent. So we have rent here. So now it's the same thing. We start with the asset account. The asset account is prepaid asset. And so now which income statement account is going to articulate with that? So as I look down the list there, rent expense jumps out at me, right? So prepaid rent and rent expense. So let's do the prepaid rent and the rent expense transaction. First of all, what type of transaction, when we debit rent expense and we credit prepaid rent, this is for Module 3, what type of journal entry is that? That's an adjusting entry, right? Remember doing the adjustment? We taught them that. Well, now we're doing that entry. We need to have that knowledge to figure out how those two statements are articulating. So there it is. There's the rent expense. There's the prepaid rent. Now let's focus on cash. How does cash impact prepaid rent? When we prepay the rent, we debit the asset, we credit cash. So now how does cash, what are we trying to solve for? We're trying to solve for that debit to prepaid rent. This is our missing variable. This is what we're trying to solve for, the cash paid to purchase the rent. So the expense, remember the expense is a debit and then it's a credit to prepaid rent. So how does the expense impact the prepaid insurance? With a credit. So now we have enough information and we're going to punch it in. So our prepaid rent, our beginning balance was 15. Our ending was 30. Our expense was 70. And so now if we do Allison's approach here, it changed by 15. It was a 70 over here, so therefore this should be 85. Okay, so that's pretty good, Allison. I'm going to just put mine on here just to torture you. So whatever way you think, and if you have an even better way, someone gave me a different way, but I couldn't remember it. So there we go. So we got 85 as our answer. Okay? Do you guys do this right now in your class? No? Okay, some people do, some people don't. All right, so remember that the prepaid rent, and the rent expense articulate. Those are the two that are articulating with one another. Okay. All right, so now we move on. The next one now is cash paid for salaries.
Now, Joe, just one thing on the first one you did with accounts receivable, that you can do it that way, assuming that all sales are on account only.
Correct. And we're not getting that involved there, where we're just trying to get them to understand change in cash, how to calculate it. Just like with everything, we're basically kind of just hitting it, making sure they get that basic knowledge. Obviously, they're going to go on to a class, and Kim probably knows the name of it, where you're probably doing a lot of cash, right? Like you're focusing heavily. I don't know what that class is called. There you go. Okay. So probably when they get to that point, they'll get into more detail. All right, so cash paid for salaries. So now, remember salaries. Now here's the thing. I will have students, this is where they mess up. They'll go to do this, salary payable, and they're going to put the beginning ending balance as a debit, and it's like, are you kidding me? That's a really bad mistake, So we want to make sure that we put the, the beginning ending balance. Now, what account is articulating? We have the salary payable. What color should we pick here? We'll go, I don't know what's going on right now. There we go. Font color. We'll go orange. And then that's articulating with the salary expense. There it is. Oh, I highlighted it. I'm doing all kinds of weird stuff. There it is. Okay. Okay. Nah, whatever. You guys get what I'm trying to do. Okay. So our beginning balance for the salary payable is 8. We end with 3. And so the salary expense, remember we create the expense in the payable. That's an adjusting entry. So the expense is going to be dumped in here. So we grab the expense. The expense is 190. So we got 198 minus 3 gives us 195. Okay, or we could be consistent and keep saying 8 plus 190 minus x equals 3. And so there we have our 198, 195. Okay. All right, I'm going to stop this right here. I'm going to just hit done.